What do you think of this? We've spent a lot of time talking about this when you were in the job at the SEC and the many warnings that you made about this potentially risky asset. And we're witnessing a reckoning in the marketplace right now. What do you think is behind it?
Look, I think it's a risk asset, and the American public and the worldwide public has been fascinated with cryptocurrencies. But it's a highly speculative, volatile asset. And putting aside Bitcoin for a minute, all the thousands of other tokens, not the stable coins that are backed by U.S. dollars, but all the thousands of other tokens, you have to ask yourself, what's the fundamentals? What's underlying it? You don't get a dividend. You don't get usual returns. And so the investing public just needs to be aware of those risks in this highly volatile space.
What do you make of the politicization of crypto? The fact that the Trump administration has become involved to this extent has reportedly turned off some investors as they watch the Trump family enrich themselves with gains like this. Is this a Democrat versus Republican thing now?
No, I don't think so. I mean, it's about our capital markets. The U.S. have the greatest capital markets, and they benefit from common sense rules of the road. And when you buy and sell a stock or a bond, you want to get, various information, and you want to know that you're getting the same treatment as, the big investors. That's the fairness in these capital markets that are so important.
I've heard a lot about the impact of ETFs on this space. That's something you know a lot about, the initial ETFs that were greenlit to start buying crypto. Did that just change the plumbing in the crypto market here by tying it directly to the stock market? Well,
ever since antiquity, finance goes towards centralization. So it's not surprised that which started as a decentralized ecosystem, and that was the vision, has become more integrated and more centralized. Investors can express themselves in gold and silver through exchange-traded funds. And as of a couple years ago, actually all the way back to my first year in the job, there were exchange-traded funds on Bitcoin futures, just as there is for gold and silver.
Yeah. Well, Mr. Chairman, I want to ask you about, speaking of plumbing in the markets, what happened at the CME last week, and whether you think the CFTC should be investigating this outage. Should the CME be facing additional scrutiny?
Look, it's something really well understood that our major stock exchanges and futures markets, the Chicago Mercantile Exchange, trades very consequential parts of our U.S. Treasury market, interest rates markets. They're critical infrastructure. On Thanksgiving evening, they had an outage at a data center. Importantly, it wasn't actually their computers. It was the chillers, as I understand it, the cooling system in this data center. And they had an outage for about 10 hours. And so the markets planned for that. The Chicago Mercantile Exchange considered, they didn't go to their backup data center. They stayed partly because it was Thanksgiving evening, as I understand it. I'm sure that they at the Chicago Mercantile Exchange and the various regulators will keep looking at it and look for lessons learned. You always look for lessons learned and how can we do things better in the future.
Well, we've experienced an incredible number of inquiries about this at Bloomberg. Our readers are asking, our viewers and listeners are asking about this. It put a real chill in the markets, to use a terrible pun in this case. Mr. Chairman, you don't sound that worried about this being systemic.
Look, I think that the New York Stock Exchange, CME, the clearinghouses are systemically important. No doubt about it, systemically important. But what happened here at this specific moment is the cooling system, as I understand, had a glitch. By the way, this data center is operated by a third party. It's not operated by CME. So they have a contract for certain performance levels. and they didn't go to their backup data center which is, I think, located elsewhere in New Jersey. If this were to happen at 10 a.m. on a Monday, I think the management team would make a different decision and probably would switch over to the backup data center more quickly. The markets probably would have a little less liquidity. Not every high-frequency trading shop or principal trading firm has the same connectivity to the backup data center. So that's an interesting business choice. And for your institutional listeners, if that happened, they'd probably see a little less liquidity until they get back to that primary data center.